Welcome to this exclusive note. Think of this as a premium mentorship session completely designed to decode the global currency markets for you. If you are looking to build, innovate, and truly thrive in the modern digital economy, well, you are in exactly the right place. Today, we're getting right to it and breaking down the absolute foundation of global finance. Our goal? To get you to understand it, leverage it, and apply it, just like an industry professional.
So, let's start with a number. $6 trillion. Every single day, upwards of $6 trillion changes hands in the foreign exchange market. To put that massive number into perspective, this market completely dwarfs all global stock exchanges combined. It's the undeniable, pulsing engine of global wealth, and it operates continuously, moving capital seamlessly from Tokyo to London to New York.
But here's the thing. The reality of this market today is that it's no longer just a bunch of humans yelling in trading pits. With AI, algorithms, and automated SaaS platforms totally taking over, the real question is, how can you tap into this massive daily liquidity pool? How do you actually start monetizing your own financial knowledge? Well, to do that, you have to understand the underlying architecture of the system.
And that brings us to our foundational blueprint for today. We're going to cover 1. The engine of global wealth, 2. Leverage, spread, and risk, 3. The macro market drivers, 4. Market structure and price, 5. The hidden liquidity network, and finally, 6. Building your trading system.
All right, let's kick things off with Section 1, the engine of global wealth, defining the jargon. You really can't write the code or build the business if you don't speak the language, right? So let's make sure you can immediately start thinking like an institutional insider. First up, we have the pip. Think of a pip as your absolute baseline measurement for success. Because currencies are traded in such massive volumes, we track fractional price movements. For most currency pairs, like the euro to US dollar, we're talking about the 4th decimal place. Today's automated systems and algorithms are built entirely around capturing these microscopic fraction of a cent movements over and over again.
Next, we need to talk about the lot. Since currencies move in those tiny microscopic fractions we just mentioned, trading a single dollar just wouldn't yield any real profit. It doesn't make sense. So we group them into what we call lots to make trading standardized and scalable for literally any business model or algorithm. Essentially, a lot is just your batch size.
And then, crucially, we have the bid-ask spread. Whenever you see a currency quoted in the market, there's a price to buy it and a slightly lower price to sell it. The difference between those two numbers? That spread is essentially your overhead. Understanding this is absolutely vital if you're planning on running profitable automated algorithmic trading side hustles. Why? Because the tighter the spread, the lower your cost of doing business.
Now, how this all comes together is that your risk scales directly with your lot size. If you're trading a standard lot, you're controlling 100,000 units, which makes a single pip movement worth about $10. But the beauty of the system is that you can scale your risk all the way down to a micro lot, where a pip is just 10 cents. This incredible modularity is exactly what allows scrappy startups and retail traders to participate in the exact same market right alongside massive hedge funds.
Moving right along to Section 2, leverage, spread, and risk, the power multipliers. Now that you know how to measure and size your trades, let's look at how you actually fund them. When you're looking at a real-world trading platform, this theoretical volume we've been discussing translates directly into execution. You select your lot size, you check the spread, and you hit execute. But if you look closely at the margin used on a standard interface, that brings us to the concept of leverage.
Leverage is, frankly, incredibly powerful. To control that standard lot of $100,000, you don't actually need to have $100,000 sitting in cash. Leverage acts a lot like a mortgage deposit. A broker allows you to control a massive position using just a small percentage of your own capital. It dramatically increases your buying power, which of course means higher potential returns. But, and this is a big but, it absolutely requires strict systemic risk management so a sudden, small market move doesn't just wipe out your entire account.
Okay, on to Section 3, the macro market drivers, why prices move.
We have the mechanics down, but what actually pushes these massive currency values up or down on a global scale? It's like a giant domino effect. When central banks signal a shift in interest rates, the first thing that happens is bond yields adjust. Then, global capital instantly starts hunting for that higher yield. When massive institutional funds buy a country's bonds, they literally have to buy that specific country's currency to do it, which in turn drives that currency's value up.
So the market is constantly digesting the economic health of nations.
Things like fiscal policy, trade surpluses, GDP growth, and inflation all deeply impact purchasing power. And in today's world, advanced AI algorithms are constantly scraping real-time data on these exact indicators. Their goal is to predict price shifts and execute trades fractions of a second before human traders even have time to blink.
Let's dive into Section 4, Market Structure and Price, Reading the Tape.
We know why prices move, but how do you actually spot when they move so you can build actionable workflows? Well, market structure tells you the overarching story. Are we seeing higher highs and higher lows? If we are, buyers are clearly in control. That's your big picture. Price action, on the other hand, is the immediate, raw psychology. It's the individual battle happening right now on the chart, like a bullish engulfing pattern that shows buyers instantly overwhelming sellers. Combining that broad, overarching structure with the immediate price action is exactly how you time your entry into the digital economy perfectly.
Let's pull back the curtain even further with Section 5, the hidden liquidity network, the market whales.
Here's a crazy thought. When you hit buy on your platform, who exactly takes the other side of your massive trades? I'll tell you right now, it's usually not another retail trader sitting in their living room. You are interacting with liquidity providers. We're talking about Tier 1 banks like JP Morgan or Citi, prime brokers, and heavily automated tech-driven market makers. They act as the ultimate wholesalers for currency, constantly quoting both a buy and a sell price to maintain market stability, even during wild global economic events.
And because these Tier 1 banks are moving billions of dollars at a time, they inevitably leave a trail. We call this order flow. Think of it like invisible footprints left in the snow by market whales. Advanced AI doesn't just sit around looking at simple bar charts. It actually analyzes this raw data order flow to align itself with true institutional momentum.
And finally, Section 6, Building Your Trading System, the next steps.
We've covered a massive amount of ground today, and this quote really captures the essence of it perfectly. This market takes global politics, economics, and human psychology and distills it all into pure data. And in our modern economy, data is the ultimate asset. It is completely ripe for you to understand, analyze, and monetize. Whether that means building your own automated trading bot, starting a fintech SaaS company, or simply taking control to grow your personal wealth.
So you now understand the basic mechanics. You know the macro drivers pulling the strings behind the scenes, and you know about the hidden institutional network providing the liquidity. You literally have the blueprints. The only question left is, how are you going to take action and build your edge today? Will you dive into coding an AI sentiment tracker? Or maybe start mapping market structure on a demo account tonight? The opportunity is out there waiting for you. Thanks for joining me in this note, and keep building.